Good afternoon to all you beautiful degenerates out there in FinTwit and Discord. Today is October 25th, 2023, and welcome to the very first edition of Reactive Recaps. I am one of your esteemed co-hosts, Rancid R2. Manning the desk alongside me, as always, is none other than Yellowbird himself.
How you doing?
So the purpose of this broadcast is pretty simple. It's to help you recognize that you are not as stupid as your parents or significant other think you are. And yes, you can actually make money in the stock market. Now, since this is YouTube and your attention spans are probably close to zero, we will keep the format of this show simple enough for you to understand and follow along at home. We will find some actionable setups in both the futures and the options markets that every single solitary person listening can find every day and execute, assuming, of course, you have eyes. My apologies to any blind people listening. We will find them every day. We will show you what they look like, and we will tell you how we would play them. Now, to keep it even simpler for you degenerates out there, we're going to focus on very limited number of tickers. Mainly, we're going to stick to SPY and QQQ for the options markets, and we're going to stick to MNQ and MES for the futures market. Now, I bet you're wondering to yourself, why would you limit yourself to such a small amount of such a big market? Well, the answer is very simple, geniuses. The reason why we trade these stocks are three reasons. One, high liquidity. What does that mean? Well, that means that you can get in and get out quick. No, that didn't fill me. No, I couldn't get it. No, you're in and out. Very high liquidity. Number two, narrow spreads. Why is that important? Well, I don't know about you. When I enter an options trade, I don't want to be instantly down 10% because the spread was so wide. It also makes getting in and out of these tickers very easily with a 1 cent spreads. And third, these are some of the most stable stock tickers in the entire U.S. stock market. Therefore, these stickers will provide you with a daily, actionable, repeatable setups that all of us can find every day and make some money. Now, I just want to be clear that these actionable setups we're looking for are not necessarily designed for these 100, 200, 300% plays. These are base hit plays. These are pay the rent plays. These are not I'm driving a Lambo plays. Okay? Following those types of plays will lead you to nowhere. Take it from experience, from our experience. Now, with that, I think it's time to let Yellowbird do what he does best and dive into the futures market.
This morning, I'm going over MNQ, which is the micro for NQ in futures. This is your QQQ, your NASDAQ stock. This morning, we started this downtrend here from about 820, and it carried down. We had a couple of points right here, and here where it made the trend line. I then noticed that it started consolidating into a flag right here, met the trend line. I took a short position and then managed the trade into the open. On the open, we ended up dumping all the way down, and I was able to get my 40 points out of this trade right here for an eval account. Now we go down here to my second trade on NQ. We had this big drop in the morning. We kind of consolidated up into a bear flag again, and I entered here around the 14,660 mark, and then I got my 40-point drop again on my eval, and that's what I am looking for. One thing we're going to discuss a lot in this podcast here, or at least I am for the future side, is the evals, and because they are great tools in order to get started in futures and to secure money for your own funded account. But that is something we are going to cover a little bit later in the episode on evals and how I got started with evals. Go ahead, Rancid.
All right, so I'll be talking about SPY today, which is the S&P 500, and I'm sure many of you are aware it's not simply one single solitary industry, but encompasses a number of different industries into this index. So, much like Yellow said, if you looked at the pre-market, you saw a pretty strong downtrend going into the open. I purposely don't trade the open, and I recommend that all new people don't trade the absolute open because it's really a gamble, and you don't want to gamble. You want to make reactive moves, not predictive moves. So I waited for the open. I watched the down come down. I watched it dump a little bit, but then around 9:36, I saw it stop, and I saw a green candle. So I'm looking at that green candle and I'm saying to myself, well, is that a pullback or is this going to be a reversal? But you can see while you waiting to the candle close that green candle doesn't close above the previous bear bar. That to me is an indication that the bears aren't done and that this is just a stop. So I entered there and you can see it continued to dump. Excellent trade that would have netted at least a 50% for your option there for a put. Now, the point of my setups is not to hit home runs, is not to get you 100% bangers, 500% bangers. Is that possible? Absolutely. But that is not my goal ever. Those goals, that only happens to me when I'm in runners. Never my full position am I hitting 200, 300%. Scale. Get in, get out, have some fun with runners. The best advice I could give. Now, that was a short position that I took. A couple bars later, I was looking at a long position. Now you can see around 10:15 this morning, you could see a lot of lower wicks. A lot of them in a row. It looks like we're consolidating. But the bears cannot get it below the low of day. And it keeps getting bought up. The bulls just keep buying it up. To me, that looks like that the bulls are finally going to get a chance to rebound here. I took a long right around 10:30 this morning. And as you can see, subsequent, it continued to go up on a bullish movement. So those are my two very basic setups from today, is to identify what the candles are trying to tell you and continue with the trend that you're seeing and look to see if the trend has stopped. Okay? And with that, we will move to our next section where we kind of discuss our individual paths and how we got here and why we felt it was so important to do this podcast together. So, Yellow, let's go.
All right. So I'm Yellowbird Yellow Bill. I started trading, I started investing back in 1999, buying up stocks and holding stocks. I started trading the day oil went negative. That was 4/20/2020. I heard on the news that oil was negative, and I was like, how is that possible? So I started Googling and looking into everything, and then stumbled across FinTwit in that space, and other people on YouTube was trading stocks and options, and I started trading stocks and options then, and I ended up losing quite a bit of money because I went in without knowing what was really going on. I then in May of 2022, I started looking at the futures market, trading futures, and found some success there. And then I started losing again, and I realized that it wasn't my trading that was the problem, it was my emotions. So I got my emotions under check and went through a process with that in order to control my emotions while trading. I started doing these prop firms in futures trading. And what a prop firm is you pay a monthly fee. They have sales going on quite a bit. And you can get access to a $50,000 account for under $20. And what you do is you trade that for a couple of days. You have a profit target and a drawdown, which is essentially your max loss. If you hit the profit target before you hit the loss target, you pass the eval phase, and they give you access to a $50,000 account that once you get past a certain point, you can withdraw money from. July of last year, I found great success with these prop firms and was able to make all my money back that I lost in options, all and then some. I've funded a personal account now, made some other investments across the board to include a house or two, and even bought some stake into a brewery. So there's that. That is my journey in a nutshell. I like to focus on simple setups. I do what's naked trading. I don't have any indicators on there on my chart, as you can see. All I have is the previous day low, the overnight low or Globex low, previous day high, the Globex high, and then the daily expected moves on and weekly expected moves on my 5 and 15-minute charts. I like to trade MNQ and mainly on the evals. On my personal account, I will venture into NQ or CL or corn or soybeans or anything like that. But for the purpose of this podcast, I'm going to stick to MNQ or MES because that is where I found the most success with these prop firms, is using those two tickers as the reasons why Rance had said. There's liquidity there. There's always decent moves, and you can find setups. And I like to focus on the simple setups of trend lines, wedges, flags, and those key levels.
It's an amazing story, Elbert. Yours, really. It's inspiring to me to hear your journey. Um, just a little about mine. I'm Rancid R2. I've been trading for about 3 years now. I unfortunately got into the stock market in the worst possible scenario. I was stupid successful. I got in at the GameStop squeeze at a very low price. I was able to sell at a very high price. To make matters even more terrible, I also got in at a very low price on the AMC squeeze and sold at a very high price. So my market entrance was pretty large, but it was also the worst thing that could possibly happen to me because it gave me the worst thing you could possibly have when you're trading: a false sense of confidence and an absolute certainty that you're right all the time. I One thing that really inspired me about your journey is your willingness to be adaptive to the market, and that was something that cost me a large amount of market education. To never come into with a bias, no matter what's happening on the candle before, it doesn't mean it's going to happen on the next candle. So that was a huge learning step for me. And then, like everybody else, I fell into the FinTwit abyss. I joined a bunch of Discord rooms, waiting for these alerts, thinking, okay, I'm going to be rich. These guys are doing it. If I just follow their lead, I'm going to be rich too. And I learned again the very hard way that is not how to trade these markets. If you're looking for an alert service or anything like that out there listening to me, I wish you the best of luck in the world with that. But if you want to make money and you want to consider yourself a trader, the only way to do that is market education, charting, watching the screens, do the drawings, do the setups. Stop waiting for someone else to do the hard work for you. It's not that hard. These simple setups that Yo and I are talking about are some of the most simple setups in the market and the most repeatable setups that you'll see multiple times a day. And probabilities say that you will be profitable if you stick to these systems. So I just wanted to get these things across to some of our listeners because I think there's at least it's been my experience that when I look at FinTwit, I think there's a large knowledge gap between me, who's not as successful as the people I'm reading about on Twitter.
Yeah, and that's always been my primary goal, is to close that knowledge gap. And that's the goal of the Discord that I'm in, and also this podcast, is to teach actionable setups. I mean, like you said, anyone can follow an alert, and typically those alerts aren't very well. But if you're just sitting there following an alert service, what happens when that alert service goes away? Or that person goes on vacation or something like that? You're out of luck. It's the old parable about you either give a man a fish or you teach a man a fish. And I am here to teach people to trade and find success and be able to not, I mean, I don't even see people making, thousands and thousands and thousands of dollars a day. If you can make $200 a day, $100 a day, a couple times a month and cover your mortgage payment or your car payment or something like that, that is a great win. And that is something you don't have to worry about no longer. And you can just cover that and then spend that other money on vacation with the family, spending time with the family.
Absolutely, freedom. Absolutely freedom. That's one of the biggest things that drew me to doing this. My profession is I'm an attorney. I owned a construction business for a decade. Um, it This was not my primary career choice initially, but once I started seeing, the potential for freedom in this, and not worrying about, flexing my giant gains or this, that, and the other thing, that's irrelevant. What matters the most is, working at this. The money will come, but just focusing on getting to a place where I can do this consistently every day, and then I never have to worry about retiring, because I could be 80 years old, hop on a computer, and still look at the chart and do the same stuff. It's really an amazing skill that I think everyone should learn, and I'm going to spend a great portion of my future teaching my daughter how to do this.
Oh, most definitely. My 11-year-old has already gotten her feet wet with some of this trading idea also. And hopefully I can teach her before she learns the bad habits that we all have picked up and everything like that.
I hope to. Those are expensive, bad habits to have.
Yeah, save her that market tuition so she can just find the success straight away and not have to lose a whole bunch of money.
So, Yellow, if you don't mind me asking, since you brought up prop firms before, do you have a particular prop firm that you use and a reason why you use that one as opposed to any of the others?
So I use Apex predominantly. I've tried the others. Um, I do not like, I don't want to say I do not like. I prefer Apex over the others because it comes down to the payout is better. They do a 90-10 split. And also, the customer service with Apex that I've had is hands down some of the best customer service experience with any of the other prop firms out there.
I've had some experience with prop firms as well, and I agree with you. I do think that Apex provides the greatest amount of advantage to us retail traders, and I think what you said about prop firms is very important for retail traders to learn, because you really mitigate your risk significantly while still being a market participant and still learning using money, as opposed to simply just using a sim account, which I think takes some of that emotion out of it, which I do think is important at some points when you holding on to hopium and that kind of stuff, or copium, whatever you want to call it.
Yeah, I've got nothing but good things to say about um, Apex. Really, there's some other prop firms out there that have different rule sets and everything like that. Also, like Top Step, they have a scaling process where you can only use so many contracts until you meet certain profit targets, and then your number of contracts can increase and everything like that. I personally don't like that. I like the Apex system to where you get your 10 contracts and you can trade your 10 contracts from the get-go. But I will say a warning, just because you can trade 10 minis does not mean you should. I personally believe that in a evaluation phase of the eval, and when you're below the payout point, you should never trade minis. You should trade micros. Keep it small, get those base hits, build that consistency, and then build upon that, and then get your payouts.
That's great. It's just because you can YOLO doesn't mean you should. I like that. And I think that's a good segue, Yellow, to the next section I want to talk about. And this will be the final section for pretty much our initial episode, and kind of talk about some of the fake trading advice that people kind of spew out there on Twitter and other discords that you hear constantly to retail traders. And I'm just going to pick out one of my personal favorites and say why I don't agree with it, and then maybe you can do the same on one of yours. So the one I'm going to go is, you can't go broke taking green. Okay? One thing I read in the Tom Hogarth book, Best Loser Wins, which I recommend for anyone that wants to trade, is that the winning percentage for retail traders is over 50%. Yet they lose 90% of their money. Why, you wonder? Well, because oftentimes people are afraid to hold on to their winners, because they're afraid of that rug pull that we've all experienced before, where you're nicely gearing in a trade, all of a sudden it turns on you tragically. So people will take smaller wins, but then on the opposite end, when they're losing, they won't honor their loss target. They'll hold on thinking, oh, it's got to reverse, it's got to reverse, it's got to reverse. So this idea that taking small greens is somehow going to make you profitable when you're holding on for large reds, that just doesn't make any sense. And I think that's something that Tom Hogarth hits really well, where when he's in a winning trade, he's looking to add, not to cut. When he's in a losing trade, he cuts quick. He's not holding hopium here. And I think that reading that book had a large impact on my personal trading style, and it kind of flipped the switch on me a little bit to hold on to winners longer, to cut losers, and if it turns back around in my direction, I could re-enter. So I just really think that something like that, you can't go broke taking green. It's something that really needs to just go away.
Yeah, most definitely. I do believe in taking your small base hits and everything, but also being able to be in a position to get those longer wins and those larger wins. And I am a firm believer, like, my number one rule is to lose small. I will never, ever, ever move my stop loss. That is the number one rule that I trade by, is to never move the stop loss. Once that stop loss is set, it is there, and it is going to stay there, win or lose. When I trade, I have a set amount that I'm willing to risk for that trade and that risk reward, and that is what it's going to be, regardless.
And it's important that everyone realizes that just because someone's stop loss is X doesn't mean yours has to be. It's all about what you're comfortable with. But I agree with him. Always keep a hard stop loss, 100%. It's not worth it to hope.
Yeah, most definitely. When I started out, I was one of those traders that would just hope and hope and hope. And there was one day that I had some Tesla puts, and I literally lost 25% of my account just because I was holding and hoping in one day. And that was the dark time for me. That was really dark.
I remember the day the Ukraine war started. I'm thinking to myself, SPY's going to take a huge dump. War's not good for anybody. I dumped a significant amount of my portfolio into that brilliant thesis of my own. Got completely destroyed. I could have cut it minus 20%. Nope. It had to drop. And I learned very, very well that it does not have to drop. It can keep going up. It can keep going. I don't care how much it drops or how much it can go up. It can keep going in that direction. So that was a hard lesson, but an important one.
Yeah, that's that market tuition.
Oh yeah, man, it's brutal, and they make you pay immediately. No payment plans.
Oh no.
So with closing this program now, guys, I think would be a good idea. I think one thing that I would say to new traders is, don't ever quit. Keep your head up. If you lose today, doesn't mean you're going to lose tomorrow. Just keep trying to find those repeatable setups, and remember, everyone, when there is chaos, there is opportunity.
Yes, and my closing notes, I would say always plan your trades, trade your plan, and preserve your mental capital because it is more important than the monetary capital that you are using in the market.